Welcome to Market Day Report, up and trading for 45 minutes. How about this market? It's been higher. We went higher for 5 straight sessions, and we moved lower yesterday. It's the canola market. We have a canola field in the background, and we're trying to add to those gains that we've had over the last 5 out of the last 6 sessions. So moving higher here in canola. And I start there so we can make the segue over to soybeans, because canola and especially bean oil have been moving in tandem together. Right now, November beans down to 11.63 3/4. Here's soy meal contracts. We're still mixed. And then bean oil, lower here. So not moving in tandem today. We'll try to figure out what's happening. But anyway, just wanted to start with the canola side. Let's move from canola and soybeans over to the wheat market. We do see a rally here with soft red at 646.5. It's up 16 3/4. Hard red now 21 higher at 696.25. Looks like $7 is definitely in the sights for that July, because September, December, and March all above that 7 handle. We have the cotton market. It's moving a little lower at 80.77. That's down 20 points, and I left one off, but it'll be a good one to end with. The corn market, the December nickel higher, 494.5. $5 in the cards here. Chris Swift Trading in studio. $5 corn?
It's very possible. It's all about the weather right now. And interestingly enough, I'll go to bed and I'm thinking about, well, our price is going to be sharply lower in the morning with all the storms coming through. And lo and behold, I wake up, wheat's 20 cents higher, corn's 4 or 5 cents higher, and beans unchanged on the day when I got up this morning. So apparently the storms, the weather to the wheat did nothing. And I think that's a real testament. We heard earlier Darren Newsom talk about how the commercials aren't really buying into this market just yet. And a lot of times that price will lead whatever fundamental situation is coming up that might cause those commercials to start coming in and buying. And then we've got a really definitive, when we looked at Thursday's drought report, we've got a really definitive line. Everything south of the Mason-Dixon line is in some kind of drought formation, and especially in West Tennessee. We've got a farm up there, and it's in really bad shape. And then up there, we got too much rain. Everything above there, clients in Iowa, Illinois, mostly a lot of them in eastern Nebraska there, got too much rain. Some of them may be looking at replant, but it's a real weather market now going forward. And again, this morning, not having the wheat be down on the day after a big rainstorm comes through tells you that wheat's in pretty bad shape. Okay.
You told me about something you did over the weekend, a little drive through the country, and we'll take a break, but I want to hear that story again, because it ties in to the cattle market. It's right around the corner on Market Day Report. Let's talk livestock futures. We start with live cattle, and that front month, April, will expire in a few days, 251.30. It's up 87. But it's trading quite a bit higher than the cash trade last week. What can we pull from that? We'll find out in a moment. 250.30 on the June, it's up $1.35. So just the fact that we're getting 251 and 250 out of those front 2 months in live cattle, pretty interesting. We'll come back to that in just a moment. Here are the feeders, and the feeders now higher across the board. That front month chasing the index at 371.02, up 45. And the May 67.62, that's up 17.5 cents. Chris Swift's with us, Swift Trading, and I want to go back to the live cattle for a moment. Sure. That front month, April, doesn't necessarily, quote unquote, converge, but we are trying to get it right up to cash trade.
Absolutely.
And we're not there. There is, what, $4 difference in there.
And it's all expectation. There is expectation that the cash market will be higher this week. Boxes improved just a little bit over the weekend. We're just not seeing the volumes of what we would like to see, but it is springtime. It is probably going to see some. There is a more research seasonal tendency that shows cattle and beef prices trading higher into the July timeframe. That all makes sense. But where we are at these highs now, how much higher do we push, and can we convert that really high cattle price down to the beef price there and support all of the higher cattle prices?
You talk about converting, and really when it comes down, I guess the bottom line for many producers, cattlemen, ranchers, they're converting grass to protein.
Yes, absolutely.
You saw some grass, but no protein.
But no protein. I drove through West Tennessee on Saturday. It's beautiful, and it mostly follows the Cumberland River Valley out there and ended up in the Cumberland City steam plant there. But all of that area is still pristine. It's real bottomland down there. It's never been row cropped that I ever knew of, and I've been going out through there all my life, and the one thing that I noticed is there's not a cow one. There was no barns up there full of hay. There was nothing of cattle production that was pretty much left. There is one farm that has still got a few head on there, but when you look at the production area out there for that, the cattle just aren't there. A lot of the reason, the age of the people that live out there. It's people who live there all their lives, either worked at the plant there, they worked somewhere, but probably a payroll job, not a farming job, and they had cattle on the side, and those cattle just aren't there anymore.
So I guess with 60 seconds left, how do we rebuild the herd?
I'm not sure, because price is not doing it. That's the one thing, and what we all see is everybody wants to be in the cattle business. So as quick as I can, I heard the expression that the cattle industry is fractured, and that's not a bad thing. That's a good thing. It takes every single producer out there to create what we have as a large beef consumption. I mean, it's huge, but it takes little bitty small fractions, everything from grandpa still having 2 or 3 head of mama cows all the way up to the huge herds out west or in Florida. Well, the biggest cow herds there is in Florida. So it ranges from that, and that fractured out there takes everything. And right now, I'm just seeing everybody's a little bit thinner. They're trying to skate on thin ice because they don't have as much product, but they want to stay in business. And fortunately or unfortunately, however it may be, that thinness could cost $30, $50 higher, it costs $30 to $50 lower in a flash, and really disrupt a lot of the best laid plans. I don't know which way it's going to go. It's tough.
Yeah, making that investment and not knowing what you'll get for it down the road, a tough one. Chris Swifts with Swift Trading in studio with us.
Always good stuff. And you guys were talking about all the different weather challenges that our farmers and ranchers are facing.